Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 151. On today's episode, we have a Halloween version for you, Halloween week. Or is the market going to have like trick or treats over the next couple of weeks? We have companies reporting, a lot of S&P 500 companies reporting over the next week. We have the election coming up. So much fear baked into that. How is the market going to react? We'll take a look at past data, and then we'll talk about how do you allocate your portfolio to kind of get the risk level right for you so you don't get frightened out of your portfolio. So get your mind right and let's get to work. Well, welcome back to another episode here at the Investor Professor podcast. So, a lot going on this week. Market's still humming along. All major averages are squarely positive for the year, which is actually doing much better than the average presidential year. So the presidential election year. So we have a lot to be thankful for this year, but you wouldn't know it if you're just watching the news. So a couple things we're going to go over today. I teased Halloween. I made it sound like I said Halloween episode. I made it sound like I have sound effects or something. I don't have any sound effects. We don't have any of that here. This is bare bones. We don't have any Halloween sound effects. I guess I could get some. Maybe a turkey for Thanksgiving. So you have to think about over the next couple weeks, man. I mean, there's so much going on. We have Halloween. We have the number of companies that report this week. So we've already had some companies reporting. We'll talk about some of those. But this week we have Apple and Amazon and Microsoft and Meta and some of the, four of the, I think Google as well, Alphabet. So many of the Magnificent Seven are going to report this week. So there's a lot going on. We have jobs number coming out. And so if you look at the market over the past week, the Dow Jones didn't fare so well. And you have to look to the bond market for this. So you see the 10-year Treasury going up, the yield on the 10-year Treasury going up. That is because the bond market is saying to everybody else that they think the Fed lowered interest rates too quickly, that the 50 basis point drop was too much. The economic data that has been coming out has been stronger than expected, meaning that they expect yields to stay up a little bit higher. And so this is the same playbook that we saw a couple years ago. Hopefully it won't be kind of the same case, but the bond market is signaling that the Fed lowered rates too fast, too quickly. So based on how the economic data comes out, remember the Fed is going to meet next month. They don't have a meeting this month, so we'll see how that goes. But we will get jobs numbers this week, along with all the S&P 500 stuff, all the companies reporting earnings. And the company reports that have come out so far have been good. Tesla had good earnings, and Tesla had the best day. They had their best day. They were up 20% in a day this week after they reported earnings. So the stock went from 213, popped to 249, finished the week at 269, which still, it finally made it positive for the year. So that finally made them actually have a positive year. For the long time they've been down. But Elon Musk, in true Elon Musk fashion, said that he expects Tesla to be worth $30 trillion at some point, which I'm not really sure where he's getting that number. They're currently worth $864 billion. And I'm very aware that when I'm just throwing numbers at you, if you're listening in the car or on your workout, it's really hard to kind of stick with it. But that would be a tremendous feat. I mean, he's factoring in robots and all the other stuff, but they did have a good quarter. It's nice to see them get back on track. And so fares well for the market. And so the NASDAQ's doing well. NASDAQ isn't quite, it's close to its all-time high, but it didn't set a new all-time high this week. So we'll have to see how the other companies report this week with the Apples. And everybody's going to be looking at Apple, and they want to know how the new phone's doing, how's the sales of the new phone, and then also how does it look like the sales are going to be for the fourth quarter. So we'll see that. We'll see Amazon. And so, we'll see, but everything's looking pretty good. And the thought process here is like, how can it get better? How much better can it get? Can the market continue to run, which we've discussed in the past couple of weeks? And really, the next 2 weeks are going to be polarized by the presidential election. And I really do try to not talk about politics too much on this podcast. That's not what we're here for. But I do want to talk a little bit about politics from a standpoint of how does the market fare? How should your investing decisions change based on who's president or not president? I mean, all of those things. And so let's just break it down a little bit. One thing I can tell you for sure, I don't know about you, but I know about me. And to me, it doesn't really matter who's president. I'm going to be investing under the next administration, no matter who it is. And so for me, it's more about investing in America, not so much investing in the person. But I know that for many that listen and for so many people out there, I mean, it's a very polarizing election. But, will we know the day after the election who's going to be president? I kind of have my doubts about that. I think it's going to take a little bit of time. I know that 50% are going to be really upset. The other 50% are probably going to be happy. So we'll just see how this goes and plays out. But just showing you some of the data on how well the stock market does. For most of it, the market really is kind of nonpartisan. The market doesn't really care who's president, a Democrat or Republican. The market since 1933 under a Democratic president that has a divided Congress. See, that's the key part. It's not so much the president. Is Congress divided beneath them? And when you look at Democratic president or a Republican president, when you have divided government underneath them, that is the best performing market. So under a Democrat president with divided government, the average return for the stock market is 13.6% a year. And with a Republican president with divided government underneath them, the average is 13.7%. So that's 1933 to 2022. So pretty even when you have divided government underneath the presidents. And so then it's dependent on if you have Republican Congress or Democratic Congress. I mean, all of those things, but really the divided government is kind of the key piece that you're looking for there. But everybody gets so wound up, and I want to remind you that we have, when we think about just the different investment biases that we have, but just cognitive biases that really impact us, one of the main ones is loss aversion. So loss aversion says that you are twice as impacted by a loss as you are a gain, right? So you're twice as impacted by the thought of a loss than you are the thought of a gain. So when you see all the presidential ads, no matter which side you're looking at, I mean, they discuss all the things you're going to lose if you don't vote for them, or all of this stuff. So you really have to kind of stand guard at your mind. And believe me, there's none of them are perfect or anything like that. But you have to kind of take a step back, control your emotions, and still be able to make the best decision possible. And I know that it is very difficult. There's going to be a lot of awkward Thanksgivings. It is a very polarizing thing, but when we're constantly watching the clips and looking at all this stuff, I mean, you kind of got to pull yourself out of that a little bit. So I believe that no matter what, the United States is still companies, no matter who wins the election, companies are still going to try to make money. They're still going to try to make products that they're going to be able to sell. And they're still going to try to push technology forward, and they're going to try to get better. And there's going to be all these things that continue to happen no matter who's president. So don't let it throw off your investing plans too much, because at the end of the day, time marches on, and you'll wish you would have done some things, no matter who won. So, I'll get off my soapbox on that, but it's just one of those things you have to keep in mind when kind of the pressure starts to get to you. So, one of the company, one of the ideas, I wanted to talk a little bit about research, and then I wanted to talk about asset allocation. And when you look at asset allocation is how much do I want in stocks? How much do I want in fixed income? How much do I want in alternative investments, whether it be gold or Bitcoin or whatever? And so that is something to keep in mind as well. If you're less optimistic for the future of the market, you could shift more towards fixed income. You could look towards more like fixed income is going to be a contractual obligation. You're loaning money. That's why it's called fixed income, because they're paying you back a coupon. So you can shift your portfolio a little bit. You don't have to go too far, but you can shift it a little bit if you think that you want to take on less risk or if you want to take on more risk. Asset allocation is really where the finance is not a science, it's an art comes into play, because that's really where it's kind of an art to get the asset allocation right. And there's some that are better at it than others, but it's something for you to think about. So even with the presidential election going on, even with all this stuff going on, I want to bring an investment idea to you to the forefront, talk about a company here. And I definitely have to say, I'm not your financial advisor. Do your own research. Past performance is not a predictor of the future performance. Do your own research. Talk to your financial advisor. Got to get the disclosure in here. So one stock I've been looking at is Rivian. And Rivian in December of 2021 was selling for $103. And now it's selling for $10.45. So it's basically dropped 90% in the last couple of years. And so now I'm looking at Rivian, and if you go do fundamental analysis on Rivian, it looks terrible. Their financials are not good. They're losing a ton of money. Their earnings per share are down. There's not a lot of hope in their financials. But we're not looking at the past. We're looking towards the future. What could be different about their future than has happened in the past? That's what I want to know. That's what I'm looking at here. So with Rivian, I don't know about you, but in my neighborhood and in some of the neighborhoods in my area, in the Dallas-Fort Worth area, I have noticed that there's all these new Amazon vans that are going around the neighborhoods that are electric. And they say Amazon on the front. They don't have a logo of anybody else. So I do a quick Google search and I ask, who's making the Amazon vans? And lo and behold, turns out that it's Rivian. And the contract for Rivian and Amazon is something like 100,000 vehicles that Rivian is going to make Amazon of these electric vans that are going to be driving around. And they got to, obviously they're going to have to put chargers in the Amazon distribution centers. They're going to have to do some maintenance on them if something were to break. There's all these things they're going to have to do, right? So I'm looking at that. I'm going, man, 100,000 vehicles that Rivian's gonna deliver to Amazon. I think so far they've only delivered 10 to 15,000. So I'm like, ooh, they got a long way to go. And the problem with Rivian has been, it's not that people don't like their trucks and the things that they've made so far. It's just that they're so expensive. They're like $100,000 a piece that most people just can't afford that. So it hasn't been a design or anything like that. It's just the fact that most people are not going to be able to afford that price point for a vehicle. So Rivian having this contract with Amazon is a big deal because it gives them a base, right? It gives them a base of income that they're going to have coming in, that they know that they're going to be able to sell these vehicles. They're going to be able to deliver them. So then I go look and I say, okay, who are the largest owners of Rivian? I'm going to type this back in, so excuse the typing because I want to get the share count right. So I go look up who are the largest shareholders of Rivian Automotive, and lo and behold, Amazon is the largest shareholder of Rivian. They own 20% of the entire business, or 158 million shares. And I'm going, well, that's interesting, right? That's an interesting development. And so Rivian going from $100 a share down to $10 a share, I'm thinking the risk return here, the risk reward, if you will, is starting to look interesting. So it's starting to look interesting to me because of now Rivian has an anchor customer, Amazon, and that anchor customer is also the largest shareholder in the business. So Amazon has a nice incentive to see Rivian do well. And so I like that. So I personally invested in this and put my money where my mouth is, so to speak. And so we will check on this. I think this is probably a 3 to 5 year. If I was judging how long is it going to take, I would say it's going to be about a 3 to 5 year holding on this to kind of see some movement. But it's one of those things, like at $10, if Rivian fell and I see that they're still delivering these vehicles and doing what they're supposed to be doing, I'd probably be enticed to buy more, at this level. So I'm willing to hold it and see what happens. But go do your own research, go look at Rivian. But I wanted to bring, those are kind of the ideas that I look for where everybody else is looking at NVIDIA, and NVIDIA is a great company. I still love NVIDIA, all these other companies that everybody's talking about, but I'm always trying to find like where are people not looking? Like where are investors not looking? Who's something that got, where's something that got beat up, and then, maybe I can do well when everybody's looking the other way. And so for me, that's at this point, that's going to be Rivian. So there's your little Halloween treat, if you will. I guess we'll find out if it's a trick or a treat, depending on how it works out. So we'll see there. But, again, don't let all the election stuff throw you off. Don't let it change your strategy too much, because we're going to do this again in 4 years, and it's going to be probably the same thing, just like we did in 2016, 2020, now 2024. And think about how the market has done since that time. I mean, I know obviously there's things that can be improved within any situation. We're looking for improvement, but you have to control the things that you can control. And so my control is I know how much money I want to save. I can look for companies that are doing well, and we will adjust depending on what happens, who gets elected, what changes they make. We will discuss all the things that we need to discuss on how we could change our portfolios to try to make the best of any situation. I mean, that is our job, when especially mine, when you think about being a portfolio manager. But even if you're just doing your own, you have to still continue to, save money, invest for your future, no matter who's president, because at the end of the day, you're in control of your own destiny, and your choices for yourself are going to matter a lot more. So you gotta remember that when things might maybe get a little overwhelming. And by the way, go vote. I voted on Tuesday, this past Tuesday. So make sure you vote. Make sure you exercise your right when it comes to that. And so if you don't vote, you can't complain, right? Isn't that what they always say? If you don't vote, you can't complain. I hope this was helpful for you. As always, I got a busy 2 weeks coming up. I'm about 10 days away from interviewing Guy Spear. That's going to be a fun one. Not sure I'll do another episode until that one. So this might be the last time you hear from me until I do that episode in New York with Guy Spear. So I'm excited about that. I think that's going to be a fantastic episode. But as always, don't mistake activity for achievement, and I'll see you next time. Thanks, everybody.